Good morning, student. In chapter number 4, we will be continuing with next sum number 6, which is given on page number 102. Here I would like to request you for one thing. Please use the latest textbook, at least of 2020 or 19. Right? If you will be using your old textbooks, which was maybe of 17 or 18, you may find few mistakes in the textbook. So it's better to follow the latest one. If you get 2020 edition, that's very nice. If you are not getting 2020 edition, then please at least 2019 edition you consider. Okay, and PDF of the textbook will be given to you with each and every chapter. With this chapter also you will be getting a PDF, and that will be a latest one. Now we come to the main topic. Here today we are going to solve sum number 6, which is given on page number 102 in new textbook. Right? Sum number 6, page number 102. The sum is transaction for capital and drawing. That means here they are going to give maximum transaction which are of drawings and capital. I hope so far you have learned so many things about drawings and capital. Means you are aware with the what is capital and what is drawing. Both accounts, capital account and drawings account, both are the account of owner. But when owner brings something into the business, that is owner is the giver, their capital account is affected. And when owner withdraws something from the business, then owner is the receiver, so drawings account is affected. This thing I hope it is clear to you. We are teaching this since chapter number 1. In chapter number 1 also, while defining terminology, I have told you all such things. In chapter number 2 also you have learned about this. Chapter number 3 GST you have learned. Right? Now let us see the first transaction. First transaction says that introduce goods of rupees 10,000, cash 15,000, furniture 5,000 and data rupees 10,000, and commence the business. That is what last time we have seen the transaction, that where owner was bringing only cash to start business. Here owner, it is not mentioned owner, but it is written and commence the business. So who will commence the business? Who will start the business? Owner. So it is understood that owner is bringing such things: goods, cash, furniture and debtors. Now all these 4 things are the assets. Goods, stock of goods, it is an asset. Cash, it is an asset. Furniture, it is an asset. And debtors, it is also an asset. Debtor means owner has to collect money from some people. Now that amount will come to business in future whenever they will pay. Right? So all 4 things owner has brought to the business, and it will affect capital account. Here total 5 effects will be there. One effect, goods comes in rupees 10,000, stock of goods will be affected. Second effect, cash comes in rupees 15,000, cash account will be affected. Third thing, furniture account, as furniture comes in, furniture account will be affected. And debtors account will be affected, as debtors are coming into the business as an asset. Right? 4 accounts, and fifth one will be the owner's account. And owner is bringing, that is owner is giving benefit to the business, owner is the giver, so fifth account will be owner's account. And we know when owner is the giver, which account is affected? Capital account. So finally our accounts affected will be stock of goods account, cash account, furniture account, debtors account, and owner's, that is capital account. Okay, here the entry will be stock of goods account debit 10,000, cash account debit 15,000, furniture account debit 5,000, debtors account debit 10,000, to capital account 40,000. Being commence business with cash, stock of goods, furniture and debtors. Before that you may see the format. This is the format: journal entries in the bookshop Shubham, and this is the format as we very well know: date, particulars, LF number, debit and credit. Okay, now the second transaction. The second transaction says, okay, date is January 1 of 2014. First transaction date 2014 is the year, and date is Jan, and first. So this will be written like this: 2014 we will write first, then Jan, that is a month, and then 1, that is a date. Okay, right? Next, second transaction, which is on 12 date. Personal motor car sold for 80,000 and introduced rupees 50,000 in business. Now personal motor car was there, that is of personal ownership of owner. For what amount he is selling it, it is not important. Out of that amount, how much he is bringing to the business is important. So you will consider this transaction that introduce rupees 50,000 in business. Personal motor car sold for 80,000, but how much amount is introduced to business? 50,000. So you will consider it as capital, but how much? 50,000. Owner is bringing 50,000 rupees to the business, and we know when owner brings 50,000 any amount to the business, cash account is debited and capital account is credited. So this is the entry here: cash account debit to capital account 50,000 and 50,000. Being personal motor car is sold and brought cash in business. Keep in mind the amount which will come is rupees 50,000. Though the motor car is sold for 80,000, but that is immaterial for our business, right? It is not a business transaction. Business transaction is that 50,000 is introduced by owner to the business. Okay, let's move to the third transaction. The transaction of this date of this transaction was 12, and we have written here January and 2014 in January, so that we will copy here, and that will 12 will be written as a date. Next transaction, the third transaction, rupees 1,000 withdrawn from bank for personal use. Now withdrawn from bank, so bank balance will decrease, or you may say bank is the giver, right? But withdrawn for what? For personal use. Personal use, that means owner's personal use, and we know any personal use, that is what it affects the drawing account, because amount is withdrawn from business account, but for what purpose? For personal use. So here the two effects will be: owner is the receiver because owner is getting for his personal purpose, so drawings account, and bank balance decreases, or you may say bank is the giver, so bank account. Now owner is the receiver. As per the rule of personal account, drawings account will be debited, owner's account will be debited. Owner's account has to be debited, that is what drawing has to be debited. And second account will be the bank balance decrease, so bank account, and it decrease, that is bank is the giver, that is credited. So the entry will be drawings account debit to bank account, being withdrawn from bank for personal use. How much? 10,000. This sum is specially for the transaction of capital and drawings only, right? So all maximum transaction you are going to have which affect the capital and drawings. Now transaction number 4, that is transaction number dated 15. Income tax refund of rupees 500 of owner of sole proprietor deposited with bank account of business. Now here I would like to tell you the meaning of this income tax account, income tax refund. See, we very well know that income tax is a personal expense. Income tax is a personal expense. So whenever there is income tax, we record it to the drawings account. Now, but here one thing to keep in mind here, the most important thing here in this transaction is what? Income tax refund. Refund means what? When it comes back to you. ગુજરાતીમાં આપણે કહીએ પરત આવે, So income tax, sometimes if you have paid more income tax, we get some amount back, whichever is the excess amount, right? Now if income tax is a personal expense, income tax refund should be considered as personal income, right? So this 500 is the personal income of whose? Owner, or refund of owner. So that belongs to owner only. It has to take nothing with the business. But what is happening here? Owner's rupees 500 is deposited with bank of business. Owner of sole proprietor deposited with the bank account of business. That is what one kind of investment by owner, rupees 500. Try to get this: income tax, personal expense, income tax refund. Personal income, personal expense is written to drawing account, and personal expense will be written to, personal income will be written to capital account. So here this transaction indicate that rupees 500 is deposited in bank, which is of personal income of owner. So one account will be affected is a bank account, that is bank balance increases, or bank is the receiver, you can say. And the second account which will be affected is owner's account. Which account? Here owner is the giver, because owner's money is directly reaching to our business account. So one kind of owner is the giver, right? So owner is the giver, capital account will be affected. The entry will be drawings account, bank account debit to capital account, 500 being income tax refund deposited in bank. If you can't remember much things, you have to keep in mind that income tax refund will be credited to capital account. Income tax refund will be credited to capital account, and income tax, if there, then income tax will be debited to drawings account. This thing you have to keep in mind. Income tax refund word is important. Next transaction 20. From business, goods of rupees 1,400 are withdrawn for personal use. Now we very well know, when goods are withdrawn for anything is withdrawn for personal use, drawing account is affected. So here drawing account will be affected by 1,400. Goods of rupees 1,000 and cash of rupees 400 are withdrawn by owner. So total drawing is 1,400. So 1,400 drawings account will be affected. Goods is going out. We have seen goods going out other than sales, then purchase reduces. Goods going out other than sales, then purchase reduces. So one effect will be given to purchase account, and one effect will be given to cash account, as cash is going out, so cash account will also be affected. So in this transaction there will be total 3 accounts affected. One is drawing account, that will be 1,400, which is withdrawn by owner, total amount 1,400, and 1,000 rupees will be credited to purchase account, as purchase is reduced because of drawing. And second, cash will go out 400, so cash account rupees 400 will be credited. Here the entry is drawings account debited 1,400, to purchase account 1,000, and to cash account 400. Okay friends, purchase account 1,400, to purchase account 1,000, to cash account 400, because goods is withdrawn rupees 1,400 and cash is withdrawn rupees 400. So this was all about transaction number 20, being goods and cash withdrawn for personal use. Being goods and cash withdrawn for personal use. Okay, next transaction number transaction dated 21. Traveling expense of daughter rupees 1,500 paid from business. It is a traveling expense, supposed to be debited to traveling expense, but the word mention is daughter. That means it is a household expense, it is a personal expense, it is not an expense of business. So we know any personal expense will be debited to what? any personal expense will be debited to drawings account. So here drawings account will be affected and cash expense are paid, no? So cash will go out. How much cash is going out? 1500. So drawings account debit, cash account credit. So here the entry is drawings account debit to cash account 1500. Being traveling expense of daughter is paid. Okay, now here what is the condition, friends? Our sum is not yet over, but my page is completed. The page which I am using is finished. There is no space on the page. I cannot write any further entry. So what is the requirement here? If our page is completed, we have to continue on the second page. We have to continue on the second page. But before closing the first page, before reaching to the second page, we have to make total of page number 1 and it is to be credited to page number 2. Here if we go through so far whatever transaction we are recorded, the total of those that is for 94,400. Right, 94,400, but it is not the final total of sums total will come when all transactions are recorded. So here what we have to do, this total we have to carry forward to the next page. Okay, as we are carry forwarding to the we are going to use next page to continue for the same sum, that this total will be carry forward that to that page. So here this way we write total C/F, that is total carried forward. You can write in full also, total carried forward, right? So total C/F 94,400. This will be carry forward to the next page, and here the next page is, and when we start on the next page, the first item we will write total B/F. That is what? Total brought forward. How much? That same amount, 94,400. Okay, so suppose your page get over after recording 4 transactions, you will be making total of up to that, and you will be applying that total to the next page. You will be carry forwarding that total to the next page. Here my total gets over, my page gets over after writing 6 transactions. These 6 transactions, 1, 2, 3, 4, 5 and 6 transactions. I made the total. Suppose your page get over after 4 transactions up to this 500. So you will make total up to this 500 total amount, and that total you will carry forward. So keep this thing in your mind. Okay. Now we will move to the next transaction. The next transaction says furniture rupees 2000 purchase from Ganga Furniture Mart for house. Again here furniture is purchased on credit, but here it is written, no? Hope you all are having textbook and you will be reading it. If it is not readable to you here, traveling expense furniture of 2000 purchase from Ganga Furniture Mart for house. Now as it is mentioned from Ganga Furniture Mart it is purchased, so it suggests a credit purchase. Ganga Furniture Mart is the giver. Now the thing is the furniture is purchased for house. So again, as it is for house, there will be personal expense, and personal expense, that is drawing. So entry will be drawings account debit to Ganga Furniture Mart. Here we have to think about the net effect to the business. What is happening here, that from business no doubt nothing is withdrawn directly. Goods is something is purchased, that is furniture, and that is for household. House, for the purpose of house, that means drawing. So drawings account is debited, and Ganga Furniture Mart, because now amount will be payable to Ganga Furniture Mart. Ganga Furniture Mart will be our liability till the date they are paid off, right? So it will be a liability of business, and that is why Ganga Furniture Mart is the giver and Ganga Furniture Mart will be credited. So our entry will be drawings account debit to Ganga Furniture Mart account. And the last transaction is life insurance premium rupees 500 paid by check. If you can't see it here, I know that you all have textbook, you know you have PDF, so you will be able to read from that. The transaction says life insurance premium of rupees 500 paid by check. Life insurance premium paid by check. What will be the effect? Effects will be, as it is a owner account, means it is a personal expense. Life insurance premium, in last sum also we have done this kind of transaction. Life insurance premium, it is a personal expense and it should be debited to drawings account, and as it has been paid through check, the bank account will be credited because bank balance decreases, bank balance goes down, bank is the giver. So drawings account debit 500 to bank account, being life insurance premium paid. So here are sum number 6 gets over. Now what we have to do, we have to make the total. Earlier the total was 94,400, and after adding this total of this amount of two transactions, total comes to 96,400, and we will make the total and we will write in particulars column total. So this is all about sum number 6. So here we have finished up to sum number 6. Next video we will be doing sum number 7. Thank you.